Hello folks, it's been a while, but I am back, and guess what? SoundHound AI stock is in the same position as it was when I last posted, but I have good news for you. With continued revenue beats, a favorable macroeconomic backdrop, and continued interest in the AI sector, I believe SoundHound AI stock is on the cusp of a massive breakout. In this video, I'll give you 3 reasons why I still hold SoundHound and why I think it's still undervalued despite its high valuation. By the way, this is in no way financial advice and I'm not qualified to give any. This video is for entertainment purposes only. Alright, so the first reason why I'm still bullish on SoundHound is that management is still delivering solid numbers in the form of growing revenue and putting out high targets going forward. Last quarter, SoundHound beat expectations of $13.09 million in revenue and upgraded rest of the year revenue guidance to $80 million. Back in May, SoundHound had a FY24 revenue guidance of between 65 million and 77 million, so this is a nice upgrade. Also in this video, I want to delve into SoundHound's 3 pillars of revenue generation. The first is royalties, the second is subscriptions, and the third is the most exciting and almost revolutionary, monetization. The first pillar focuses on automotive products and is humming along nicely. The second focuses on restaurants and is growing strongly as well. But the third pillar is the dark horse in this race because it's sort of ambiguous, but in a good way. You see, SoundHound AI stock is not trying to fit into an existing market segment, but it's an innovator that is trying to change the way customers transact. Currently, it is focusing on cars and restaurants, but this is just a way to get users into its voice AI ecosystem. And from then on, pillar 3 will become financially viable. And that, my friends, is where SoundHound's true value lies. This is what I believe the market may be missing. The market looks at the current price to sales ratio, which is very high at a whopping 32. But again, if SoundHound's voice AI technology becomes mainstream and ubiquitous like the iPhone, its current market cap of only $1.8 billion makes it look very cheap indeed. So what I'm trying to say is, as long as the first 2 pillars exhibit strong growth and continue to gain traction, they will provide the fundamental bedrock from which SoundHound's valuation can grow, and the third pillar is the juice that will really turbocharge it. Once the market sees the material upside in the third pillar, we should see further upside in SoundHound's valuation. Moving on to the second reason why I'm still bullish on SoundHound, and that is the macroeconomic backdrop is highly favorable to small cap growth stocks like SoundHound. When I talk about macroeconomics, I'm mainly talking about monetary conditions coordinated by the Federal Reserve. We all know that rate cuts are good for stocks in general, but the beginning of a rate cut cycle is where most of the gains in stocks, especially small cap stocks, are made. A recent example was in 2020 when the Federal Reserve cut the Fed funds rate by 50 basis points on March the 3rd, much like it did this week. When that happened, the market rallied 25% to finish 2020. That is despite the crash that occurred in March. The current rate cut cycle is unusual in that it's happening whilst there hasn't really been any financial issues. It seems more like a preemptive cut before the unemployment rate gets out of control. Remember, the Federal Reserve's dual mandates are to control inflation, well, basically have it at a suitable level, and to sustain maximum employment. Inflation is currently under control, but unemployment looks like it may be teetering on the edge, and I think Jerome Powell wants to really stick that soft landing, so he's sort of preemptively cutting, and it was a bit of a jumbo cut, which is even better for stocks. In any case, I think the Fed is cutting into a fairly robust economy, and as a result, the current bull market is likely to be prolonged. So where are we in the boom-bust cycle? If we look at this boom-bust cycle diagram, I think we are still in the early stages of this bull market. Sure, we could see further corrections this year, but I think we are likely to end the year high from now. When we look at individual sectors, I think it's no surprise that the strongest is still the AI sector, with stocks like Nvidia and Palantir leading the charge. Small caps like SoundHound have been in the doldrums in the past few months, but I think it's mainly due to the fact that it ran up so hard in February and it's just been consolidating for the past 6 months before it tries to make another dash to the upside. Moving on to price targets, I want to reiterate that my initial price target is still $12. I think we can still get there before the year's end if next quarter's results beat expectations and the broader market continues to rally. SoundHound's Q3 results look like they'll be coming out sometime in November, so that gives us about 2 months of possibly more consolidation. However, positive news in the meantime can trigger a re-rating. The most likely ones will be new contract wins, new partnerships, and possibly mergers or acquisitions. In the last quarter, SoundHound signed up a large pizza chain in the US and also expanded its agreement with Stellantis for its in-car voice AI product offering. Looking at the chart, it's basically been hibernating for the past 6 months, but again, that's because it went up so quickly back in February. I think this period of consolidation is nearing an end, however, and SoundHound should join the rest of the market in rallying very, very soon. Alright, that's it from me today. I'll be posting more frequently again from now on, so if you haven't already, please hit the like and subscribe button for more SoundHound updates. Thanks for watching and see you next time.